this evening. Beauty and skincare brand VLCC is to acquire D2C men's grooming brand Ustra, owned by Happily Unmarried Marketing through a combination of secondary buyout and share swap. Now, this partnership brings together two homegrown personal care brands and marks VLCC's foray into the men's grooming segment. Post the merger, VLCC will make further investments to accelerate the growth of Ustra. And to elaborate on the road ahead at Ustra, joining me now is its co-founder, Rajat Tully. Rajat, welcome to Startup Street. Now, with this acquisition, Rahul and you will continue to spearhead Ustra and also drive VLCC's direct-to-consumer play. So first, tell me what synergies you see with VLCC. Additionally, what happens to the Ustra team? Will you need to cut team size now that you're merging with VLCC?
Hi, Shruti. Thanks for having me on the show. It's very interesting. When we met the VLCC team and we discussed this possibility, we realized how much synergy they lie between us and them. You know, VLCC is a very solid, strong brand, very good offline presence, a very good record, and a very strong legacy. And now they have a very good new management team. For us, Ustra has been a D2C, player. We've still largely e-commerce driven. So what this brings together is our e-commerce and D2C capabilities and their offline and their distribution capabilities. So in a nutshell, they will help us grow bigger in offline, and we will try to bring, we will bring VLCC online and try to build that business. We see there's huge potential there. You know, there's so many brands already doing really well, and there's no reason why VLCC should not cross them or become bigger than that.
Okay.
In terms of, because the beauty of this arrangement is that the structures are so nice and so nicely defined, and both the teams come with a lot of strengths. I don't see too many people, too much attrition, because we have a very small offline team. They have a very big online team. We have a fairly large and e-com team, and they have a very small e-com team. So I'm sensing that a lot of it will merge, and what will emerge will be a very strong, good powerhouse
All right.
of two brands.
A powerhouse
which are
of
going to
brands.
grow both
Yeah.
in e-com and as offline. Yeah.
Rajat, but can you give us a sense of the cost of acquisition, and if you could also give us some details on the secondary buyout as well as the share swap?
So I'll tell you, I can't give you the exact number, but what I can say with a lot of confidence is that given the environment and given the way things are, we are more than happy with the valuation and the structuring. And the interesting bit is, all our investors are on board, and there was an option to either partly sell their holding, and the other option was to swap. Most of them were very keen to swap. They believe that the new company will bring a lot more value.
Okay.
It will help increase, their returns eventually over a period of time. So, while I can't give you exact numbers, I think largely there is satisfaction in the way this deal has been structured and the transaction happened.
All right, Rajat, like I mentioned earlier, that VLCC will make further investments in Ustra to accelerate growth. So what kind of investments are we talking about, and how soon can we expect this?
So, for one, we really want to scale our offline in a very exponential way. We are in a limited number of stores right now. We are in, say, 8,000 stores. We're looking to expand meaningfully in about 30,000 stores. Then there is the entire modern trade chain, which we are not actively participating in. We want to ride that distribution network of VLCC as well. So these two itself, if we were to do this on our own, it would require a lot of substantial investment and manpower. So they're going to do this. Apart from that, we are going to together build the Ustra brand. So there's going to be a lot of marketing initiatives, and going to be a lot of interesting stuff that's planned for the next couple of quarters.
Okay.
So you will see lots more happening at Ustra. And
absolutely.
We're really excited about what lies in store for us.
Rajat, like you said, Ustra has, SKUs across fragrances, hair care, face and beard care. Can you take us through the current revenue growth numbers, and how soon do you hope to turn profitable?
Okay, so in FY23, our objective was to cross the 100 crore number, and I'm happy to say that we did that comfortably. So that's where we are at right now. Profitability is something that we had to work on, and in the following, so once we have the entire offline impetus coming to VLCC, I think we should turn profitable also maybe by the end of this year, or maximum the next quarter of the next financial year. That's what we're looking at. We are a complete men's grooming brand. We've got colognes, we've got skincare, we've got hair care, and we've got, of course, Beard, which is a legacy thing. So
Okay.
we're doing well on all these four categories, and we will keep adding and innovating more products in these particular categories,
Sure.
and also adding new product ranges depending on what the market wants.
Okay, so let's quickly talk about the mix. What kind of sales happen offline versus online? You mentioned earlier that you're planning to scale the offline side of the business. So what's the mix going to be forward? If you could quickly tell us.
Yeah, sure. So right now it's about 65 to 67% is online, and 33% is offline. In the next 2 years, we see that becoming 50-50%.
Okay.
Because while online will keep growing, but the kind of scope there is in offline is unimaginable. There's a
Sure.
number of retail potential and touch points that exist in India. We need to cover all of them. So,
Okay.
so I'm expecting in the next 2 years, this is going to become 50-50.
Okay,
And
in the
as
next-
overall size of the business increases.
So 50-50 in the next 2 years. One final question, Rajat. You're currently present in Indonesia, Malaysia, and the Middle East markets. You're also eyeing the US. What kind of sales are you clocking here, and what is the kind of penetration that you're seeing?
So very interestingly, Shruti, we have not gone. It's all inbound business. We haven't really gone anywhere to look for to overseas business.
Okay.
The people from Indonesia came, and we've been working with Indonesia and Malaysia for the past 3 years now. And currently, the total export pie would be about, say, 10% of our total business. So it's not very substantial. This year, we think it'll go to 20%. The US and the UK, so VLCC has a very strong presence in the Middle East. So we hope to ride on that and enter into the Middle East. There is a
Okay.
demand, we know, because we keep getting a lot of queries from different vendors as well as customers. The USA and the UK is an initiative more through Amazon.com. They have taken us there because they do that with certain set of brands. So that's a business at US and UK. But right now, since our focus has largely remained in India, we are going to look at the low-hanging fruits, which is
Okay.
the Southeast Asia and the UAE, and expand on that.
All right.
And maybe the USA and the UK will follow when we're a little more prepared. And
Okay. All right, Rajat, we wish you the very best for all your global expansion plans, and many thanks for joining us on Startup Street today.
Shruti, pleasure having you. Thank you so much for this. Thanks a lot.
From small beginnings to billion-dollar